So with interest rates declining all over the world, the Bank of England just announced a reduction to 4.25%. It seems like for savers who prefer putting their money into bank accounts or even a cash ISA, those rates are going to be coming down pretty fast soon. Now over here, you can see this is a trading 2-on-2 cash ISA. So they have just dropped their rates down to 4.35%. When they started out, it was over 5%, and that interest was paid daily. Now it's paid monthly and it's gone down to 4.35%. Now with the central rate at 4.25%, further rate cuts for cash ISAs across the board, not just trading 2-on-2, are very likely to be the thing. Now you can also see that I have deposited a grand total of £0 and 0 pence into my cash ISA because I don't believe that I should use up any of my ISA allowance on just saving. Now if I were to use up my ISA allowance, it will be 100% towards any sort of stocks and shares ISAs, whether that's a stocks and shares lifetime ISA or just a bog standard stocks and shares ISA. This one I have on trading 2-on-2, and you can see over the past month alone, my rate of return has been a positive 8.7%. Now imagine getting that from a cash ISA. You're probably going to have to wait 1 or 2 years. That is a rate of return of around £8,900. It's going to change as I speak. However, investing is not at all the same as just saving. Now, if I change the axis to the past 3 months, you can see I am down by 4.6%. That's an entire year's worth of cash ISA gains thrown down the drain in just 3 months. And of course, with the stock market, the value of your investments can go up or down. But in a cash ISA, you're just saving, so the nominal amount of your cash, for example, if you had £10,000 in there, that value typically can't go down, only up in value as you gain interest. So is it worth, with the lower rates, to ditch your cash ISAs and just go with investing? Now, if you'd like to sign up to Trading 2-on-2 and receive a free fractional share worth up to £100, all you have to do is to click the 3 horizontal line menu over here. Scroll all the way down until you see the section use promo code. And in this section, just use my promo code JUBAIR and you should receive a free fractional share. Now, before we dive straight into a stocks and shares ISA, which is of course very different from saving, let's just see what the best cash ISA rates are at the time of filming. Now, I'm going to use this website, moneysavingexpert.com, as they always do their best research, so I can trust them. Now, the thing is, with the Trading 2-on-2 cash ISA, it's very competitive and it's also an easy access account, meaning that you can easily take out your money whenever. There's no penalties for taking your cash out early. There's no fixed amount of time that you have to have it. If you do choose to get your cash locked in, you can get a higher rate of interest. But personally, I'd just go with the stocks and shares ISA. But if you're really trying to squeeze the lemon with an extra 0.5% in there, you can do it with a fixed rate if you really wanted to. Here are some of the other cash ISAs that will give a rate that is very competitive or better than Trading 2-on-2. For example, currently Plum is giving a headline amount 5.06%. However, when you look into it, you can see that this is actually a 3.54% annual equivalent rate variable, and you get a newbie bonus for new customers only. So it's a 3.54% variable rate with a 1-year boost. It seems like a lot of banks and apps are doing this. They're giving a headline amount which isn't actually the full story, because it includes a bonus which tops up to that headline amount, for example 5.06%, but that's a very short-lived bonus. In the case for Plum, that is 1-year bonus, which is actually not too bad. Now you can also try Leeds Building Society, which is 4.1%. However, there are always terms and conditions. For example, the minimum is £1,000, the maximum of course £20,000. With Trading 2-on-2, the minimum is just £1. Honestly, you can look at these rates for yourself, but you're always going to find stipulations, for example minimum deposit amounts, and they're not going to be very competitive overall with Trading 2-on-2 and their cash ISA. And like I said before, as I'm filming, the rates were just dropped 15 minutes ago, so these will be coming down very shortly after that. Now 4.35% still seems like a very decent amount, very low risk here, pretty much no risk at all. The funds are kept into a very safe bank account, so as safe as a high street bank. Now when it comes to investing, of course your capital will be at risk. The value of your investments can go up or down, and that is precisely why you can potentially get a much higher return on your money because of the additional risk. At the same time, if you invest into something and the company goes bankrupt, you can lose all of your money. But with the stock market, great things can happen. For example, today as I speak, my gain is 0.9%. or £988. Now, if you are someone who traditionally invests into a bank or a cash ISA and want to make the next step, there is always the ability to just put cash into your stocks and shares ISA. And then what you can do is to earn interest on your uninvested cash. Now, first things first is to give you the caveat. Interest on uninvested cash, when enabled on Trading 212, invites some level of risk because the cash will be put into qualifying money market funds, which are very low risk funds. However, they are still classed as investments, so your capital will be at risk. However, they are currently paying 4.6%, which is competitive with the highest rate of cash ISA. And one of the best things about it, in my opinion, is that you are paid interest out daily. Currently, I don't have anything in cash, but you can see over the past 2 years, I have gained £1,687.29 through this feature. Now, qualifying money market funds, although they carry a risk, are considerably less risky than other investments that you may make. As you can see here, I have a few investments. My largest investment is in the iShares Core S&P 500, which over the past month has returned investors a huge 14.36%. That's about 4 to 5 years of ISA gains just in 1 month. Bear in mind, in 4 to 5 years, the interest rate, the central rate, is likely to be a whole lot less than what it is today. So as you can see, with investing, as opposed to just saving money, you can oftentimes, especially over the short term, be at a unrealized loss. So for example, even with the upswing of 14 point something percent, I am still down overall in this investment by 5.91%, or a loss of £6,697, although this is an unrealized loss. If the markets are going to keep continuing to go up, then this loss will be less and less, and eventually this can become a realized or unrealized profit. Now, of course, you have to weigh out your risks, potential pros and cons of investing into a cash ISA versus a stocks and shares ISA. Typically speaking, you don't want to put any money into investments that you will need in under 10 years because the stock market over a short term, anything less than 10 years really, can show a lot of volatility. Now, as you can see over the past month, even though I am up by 8.7%, you can see the amount of sheer volatility we've been seeing. So at one point, my portfolio value was £95,000 and today it stands at £110,000. At the peak, my portfolio was worth £116,000. So it just goes to show, if you can't stomach these losses, then investing might not be right for you. Although if you want the best returns in personal finance, you're going to have to put your money at work. And this goes for anything. If you want to start a business, you're going to have to invest your own cash or someone else's cash, and that money will be at risk. Same with investments and same with everything else. So make sure to check out some of my other videos and I'll see you in the next video.